Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 12th, 2018. So, hey, yesterday we just had this really great bullish reaction to price support. We had a gap down yesterday that brought us back down here in the diamonds to test that level, this March high level right here. Test it. And we had that great bullish reaction, another whipsaw in the day. If we look at a short-term chart, something I want to point out here and to be a little bit watchful and careful of is, doggone this thing, we're bouncing around a lot. So here, just a day ago, okay, we gap up and then we give it all back. We turn it around and go down. The next morning, yesterday, we gap down substantially and then reverse that and come back up. But I want you to notice here in the Dow, nothing really changed. We didn't really break out. We've had about 400 points of movement in the market, but we've really gone nowhere overall. So kind of keep that in mind when you're thinking about this market. It's really easy to look at that bullish candle on the daily chart and just get all those warm and fuzzy feelings going and not really focus in on the fact that overall, this is still in a downtrend here on the diamonds. So watch that closely. Now, currently, futures are pointing to a flat to just slightly bearish open. Earlier when I was writing the morning note, the futures were pointing to just a slightly positive open. So we're kind of bouncing around in here. Now, one of the things that's important about price action like this is we need to see price action follow through. Bullish candles are wonderful. This piercing pattern, beautiful. But we need to see price action follow through with that candle to make this candle valid. If we don't get follow through, then this candle is not valid, and we could easily see those bears come back and attack and push for that low again. It's not what we want to see. We want to see those bulls push through. So this morning we're not getting that nice bullish open that I honestly was hoping for. We're kind of a flat open. Now, that might not be all that surprising when we have a dangerous and major hurricane bearing down on the east coast of the United States and those swirling winds continuing to flip around on the potential tariffs with China. So a little bit of tentativeness here maybe in the market, a little bit of concern. So perhaps it's not all that big a surprise to you that we're not getting that really bullish follow-through action. Keep in mind, overnight, Asian markets were lower across the board, and European markets are just pretty much flat, just ever so slightly bullish. And so we're not getting that warm and fuzzy that we would like to see after a nice bullish day yesterday. Let's take a look at the SPY real quick. SPY, nice bullish engulfing candle. But once again, a bullish engulfing candle holding support. That's what we want to see. We want to see those bulls defend in that area. But we have that complication of getting that follow through. We need that bullish follow through on this chart. So kind of keep an eye. A bullish engulfing candle with no follow through is not a good signal. That's all there is to it. It's not a valid signal. It's a valid hold of support, but it's not a valid buy signal unless we get some follow through. Let's take a look at the Qs. The Qs, a little bit different situation here with the Qs. The Qs had beautiful bullish engulfing candle here yesterday, but let's focus in on the fact that we're still having a little bit of trouble here. We are still right below that breakout resistance high. So we're right at resistance, and we're also below this trend line, meaning we broke trend and we could be just rallying back to the trend to find that failure point. Now, I hope that's not the case. I don't want to see that happen. I want to see us get that follow through. But once again, this morning, we're not seeing that in the market. We're not seeing that in the future. We're not getting that follow through. So we have to be cognizant of what the pattern is actually showing us. And a failure at resistance could be really devastating here for the Qs. Let's not have that. Let's see those bulls hold on here. Let's hold in this area and then finally make that breakthrough that we need to advance us up another leg in the market. IWM chose, well, it held support. This is the breakout high here, all-time high breakouts. We broke out here. Everything looks good. And now we've pulled back and tested it as support. So yesterday we had a nice test of support, but we really didn't have that bullish, warm and fuzzy feeling of a good bullish candle here. So it's great that we held support. We just need those bulls to kind of push on through here instead of just resting right here at support. Let's take a quick look at the VIX. Now the VIX, I've been mentioning here over the last few days, this potential here of this inverted head and shoulders pattern and the concern of fear creeping into the market. Now that fear the last couple of days has certainly been doused here. We've pushed her back down, which is a good sign, meaning that our resistance up here so far has done its job. But if we happen to see no follow through today, if those bears do start to take over, we'll want to watch this very closely because we could easily see a little bit of fear creep back in if we don't get that follow through and a rally back toward that resistance. So watch that close. We need to see those bulls follow through and continue to push that fear lower if we're going to get that next leg up in the market. Let's take a quick look at T21 22. T21 is that 4-week new high, new low ratio, and I plot that on a line chart. And all this is we're looking for those reversal zones. It doesn't really give us any clues other than potential reversal zones. And unfortunately, we've been bouncing around so long in this mid-range that we haven't had really good signals here on T21-22. But what it does tell us is we have plenty of room to potentially move down, and we have plenty of room to potentially move up. So not any great signals as to which direction we're going to go, just that we have to be ready for anything, and that we could go either direction here in the market. So we want to watch that closely. Let's go back here and let's take a look at the economic calendar today. Economic calendar has a couple items on the calendar that can potentially move the market around, and that would be the PPI. Now, producer price is expected to show a 2% increase today, just a slight increase, and it even when you exclude food, energy, transportation, and things, they're expecting about a 2% rise. So everything's holding on there, not seeing exorbitant price increases, just kind of that modest increase in those producer prices. Also, we have the petroleum status report today, and petroleum status is not forecast forward, but it's one of those that if we get some kind of surprise build in U.S. supplies, we'll see oil prices affected, which obviously can move the market. And if we see that number come in with a decline in those supplies, we could see those prices start to rise up. And of course, that also can affect the overall market. So watch those two reports today as the most important. And then down here we have, at the end of the day, we have the beige book. And the beige book probably isn't going to help most of us out with any information, but it is important for the Fed. That book is normally released 2 weeks prior to the FOMC meeting, and they use that book in helping them to determine their monetary policy. So keep that in mind. A couple weeks out, we've got a Fed meeting on the way. I think it would be unreasonable to believe that there won't be an interest rate increase. So we'll have to kind of think about that as we plan forward in this market. So FOMC coming up here in a couple of weeks. On the earnings calendar, we only had 9 companies reporting earnings today. There's really nothing in the pre-market that would be a major concern on earnings. They're all relatively small companies. But in the afternoon, there are a couple maybe potential notable companies to watch out for. So make sure you're checking those earnings reports and being careful not to, or being surprised by an earnings report, holding a stock and get that nasty surprise in the morning when a stock might gap down, creating a dangerous effect in your account. So watch those closely. Make sure you're checking those earnings reports on a regular basis. With that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And I do truly hope those bulls step in and push this up. We want to see that nice reaction to the upside. But at the same time, I want to be very respectful of what the price action is showing me. And if I don't get that push through to the upside and these bullish candles are not confirmed, then we have to take a little bit of caution and be a little bit careful and realize that the bears could jump back in and take that as a sign of weakness and push us back down. So be careful with overloading or over trading this market. With that, everyone, have a great day. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, follow me button on Facebook, click those thumbs up buttons and drop a comment. I do appreciate those very much. And also, always feel free to share this video with any friends and family. Have an awesome day. Have great profits, everyone. And we'll talk to you all bright and early Thursday morning. Take care, everyone.